You're watching the special edition of Young Turks. We're in conversation with Renuka Ramnath and Karthik at IVCA. Renuka, I want to go back to that point that you made about we're entering an era of a new normal. And after every crisis, we do talk about a new normal. Now, what will that mean in terms of social consumption, in terms of behavioral patterns? I mean, one of the companies that you bet on, for instance, PVR, is facing an uncertain future today. We don't know when it will be able to restart its operations, or whether the way that we've been used to going to the movies is going to be something that that will continue as is. Now, how do you navigate through a situation where we don't know how behavior patterns or consumption patterns are likely to change?
Absolutely fair question, Shireen. So as Karthik said, some of these companies are very mature and they are financially very robust. So speaking specifically about PBR, we had just raised equity in the company. So we were fortunate. And sensing that this problem was right around the corner, we had also showed up liquidity in the company through borrowings. Fortunately, because of our recent equity raising and good financial performance of the company, our debt to equity was very, very comfortable. So in PBR, speaking specifically about the issues of not being able to be in large crowded places, malls being shut down, zero revenues, the only solution is to have liquidity on your side, cut down costs to the new normal. As I said, it's not incremental. It's not thinking about should I do a 15% cost cut or a 25% cost cut. It's going down to the basics and questioning every element of cost and asking why should it be in my P&L in the going forward scenario. Three is not to be very optimistic about when we can open the cinemas and when we'll be able to see cash flows coming to our company. So making a very gradual assumption about when things will come back to normal, what will be the social distancing requirements, so can we fill capacity, in how many of our markets we will have delayed opening, will there be content? So there is this whole supply chain effect, Shireen, which is what is going to be the biggest challenge for every industry when we think about the comeback period of COVID. It's very, very hard for any management to precisely determine how much supply chain disruption has happened. So in PVR's case, it will be a question of how many new movies we can get released, because we bring in our patrons into our theaters when we have new movies. And even if there is a new movie waiting to be released, will those producers want to wait for some more time before they launch the movies? Because for them, it's a one-time opportunity to encash all the money that they have invested and all the hard work that they have put in.
Yeah.
So there is a lot to think through for each of our companies in terms of what would be the post-COVID comeback and preparing ourselves for huge supply chain disruptions. And the only weapon in our hand is, as I mentioned earlier, dynamic decision making, thinking about the new normal in a fundamentally new way, and being, I would say, highly realistic, not pessimistic, but realistic in terms of thinking about the post-COVID cash flows when things will come back to normal. But the real challenge for every company in this country is liquidity.
Yeah.
And it has been a challenge even in the pre-COVID space.
Yes.
So that problem has got magnified a lot because of COVID.
Absolutely, the liquidity problem getting exacerbated through this crisis. Karthik, I'll give you the final say then. Renuka talked about the need for a greater degree of collaboration. What we saw yesterday with that big announcement, Facebook picking up a 9.9% stake in Reliance Jio, are we likely to see a lot more of this kind of collaboration, especially bringing the Valley closer to India, given the fact that they're not welcome in China? And secondly, consolidation here in India, given the fact that this is trying times, not everybody is going to be able to have enough money, they're not going to have enough of a runway and may not have the ability to raise funds. So will we see forced consolidation?
Yeah, I think it's inevitable. It's always a function of, I wish everything was in the hands of the founder or the board. I think it's always a combination of the two. And, sometimes you have to make your best effort in being able to raise the capital. I don't think capital raises which buy you 3 months or 6 months are going to be sufficient, other than to be able to continue those kind of conversations. So it's inevitable that there will be 2-3 different, personas of consolidation. One are obviously good talent not going to waste and getting acqui-hired. So there are always going to be strong companies, even in such scenarios, who want to, not go and rebuild an adjacent business or take over a good team. And we've started hearing the first murmurs of such inbounds. And inevitably, in every portfolio in the venture landscape, there are going to be plenty of those kind of conversations. The second is, where it makes a lot of sense to consolidate the strength of the balance sheets, right, rather than fighting 2 different battles. And back in the day when we sold Taxi for Sure to Ola, it was a decision of that nature, where there's only so much you can do to compete in a multiplayer oligopolistic marketplace, and you move quickly to a sort of a short-term duopoly because you can't all be burning and spending that kind of capital. So there's an economic sense in bringing those kind of mergers together. I don't know how many there will be and how many large ones and small ones there will be. They're more likely to happen when there are larger companies which have more dominant balance sheets. Very rarely do you see mergers of equals in this country. And the third is the interesting geo-Facebook phenomena. Yes, it's kind of open ground for the Western Hemisphere to start thinking about whether there's something attractive to buy into in India, given that there is an environment where they might not be flush with new capital to burn. And if they're being very conservative and they're growing slowly, does it make a dent in these strategic investors who could come in and actually take big slices of companies? That said, a lot has been said on your shows and otherwise on Facebook Reliance. I was just doing the math, and it's great optionality, right, for Facebook. At the end of the day, it was about 10% of their cash balances, 10-12%, and 1.5% of their market cap to buy into 10% of India's jewel in the crown in terms of the Indian internet scenario. So it's a great trade, and Walmart did this historically with Flipkart, and I wouldn't be surprised if a few more step in as well.
Yes, we may see more of these deals, these mega deals going through, but we'll have to wait to see how this plays itself out. Renuka and Karthik, always a pleasure. Many thanks for joining us here on CNBC-TV18 on the Startup Playbook. And I think we are going to have to continue to have this conversation as we see things playing out and the full impact of COVID-19 being absorbed by the economy. But for now, from all of us here on the team, goodbye. Many thanks for watching.